Welcome to Stager Savvy, insider secrets to stage your home and sell it for more. My name is Stephanie. This is the podcast where we bring you the latest tips, tricks, and expert insights from the world of professional staging. And I'm joined by my friend and fellow staging expert, Kandice.
Hi, everyone. We may be competitors in the Denver market, but we believe in abundance and collaboration over competition, and we're here to share our collective knowledge with you. So sit back, relax, and get ready to learn from the experts. This is Stager Savvy. Okay, hey everybody, welcome into Stager Savvy. We're so excited to have you here today. We have a special guest, right? Look at this.
And we're live.
And we're live. This is Galen. Today we're going to talk about all the mortgage things that we need to talk about. I know a lot of people don't know, with staging we always talk about people don't know where to start, right? And so that's a lot of the information that we throw out there is start with this, right? Yeah. So I feel like buying a house is sort of the same thing. They don't know where to start. And really, they should be starting with you, right?
Yeah, they really should. A lot of times people will kind of bypass the process and just go start looking at houses, whether it's on Zillow or, hey, my friend is a real estate agent. We're just going to go do some open houses. Okay. They have a tendency to fall in love with a home and then come to find out they don't qualify for it. So it's really important for them to talk to a lender and make sure it's the right time for them and what their overall goals are. So yeah, you hit the nail on the head. It really is important to get your pre-approval and talk with your lender first before you go shopping.
Well, then you know what you can afford.
Exactly right. That's exactly right.
So they start with that. You
Correct.
Pre-approve them. Mm-hmm. They know what amount they can look for.
Yeah, correct.
And then what's the next step? So say they're looking for houses, they're doing the things, they find one they love, they come back to you.
Yeah,
then
for
what
sure.
happens?
Yeah, so when we get to that point, we'll get them what's called a pre-approval letter that they can share with their agent, and it really comes down to having a good relationship, not only with us as lenders, but also with real estate agents. Make sure a lot of people really do business with who they know, with who they like, and who they trust, and so make sure you have a good relationship with your agent. They can, take a look at really helping them determine what their wants are versus their needs. One of the biggest mistakes I see people making, especially for like first-time home buyers that are trying to get into the market, is whether they're coming from maybe they're living with their parents or a multifamily situation, and they really try to overbuy. And what I try to tell them is work with your agent, determine what your wants are versus your needs. Maybe you want a 3-car garage, but is that really in the budget, right? And determine that this is really your starter home, your first home, as opposed to your dream house. Right. So we talk with them and help them determine that, get them pre-approved, and then they can go shopping. And kind of the process from there is once they find a home that they like, we can work with their agent to adjust the numbers and different things. They make an offer on the home, and then that really starts kind of going through that process from a mortgage perspective.
Right. Sounds very important to get started with the mortgage lender first.
Yeah, it really is. So.
For sure.
Yeah.
And I kind of skipped right over. We should let you introduce yourself.
Yeah.
Tell us about yourself. How long have you been doing this? What's your story?
My name's Forrest Gump. So Galen Burson, I work with one of the top credit unions here in Colorado in the mortgage lending side. And it's interesting because people belong to a credit union, and I'll talk about kind of the different lending options that credit unions can provide, that some of the differences. But I've seen people who belong to a credit union as a member that don't even know that credit unions do mortgages, and
I didn't know that.
so and as far as I know, most credit unions do, maybe not all of them, but there really is some advantages to credit unions on the mortgage lending side. So with that, maybe we can talk a little bit about the different type of lenders that are out there.
Yeah, absolutely.
So typically, most people are familiar with the larger banks that rhyme with Schmel Schmargo or Face or whoever. So those we've seen over the past several years, a lot of those larger institutions scaling back on their mortgage production, mortgage operations, just from the overall cost of acquisition standpoint. So the how much it costs to originate and produce and service a mortgage. So some of them you'll see scaling back on what they're offering. So those are kind of some of the larger lending institutions that most people are familiar with. There's also mortgage brokers. And some advantages of working with mortgage brokers are, let's say I'm a mortgage broker. I have lending relationships with other institutions, maybe you at Bank of America, you at United Wholesale Mortgage, and so they can shop around and look for different programs that do allow different products for those for you as a buyer. With a credit union, typically we work in-house. We are able to service all of the loans that we sell, which is an advantage because some of the other lending institutions like brokers, they will typically, once you close on a loan, they will sell it to another lender. And a lot of changes came out about with that back in the 2007, 2008 after the recession. There's a lot of changes as it came about as of that. But with the credit union, kind of circling back, we can sometimes, if there's a solid lending relationship, long-term member history, we can maybe make some portfolio product offerings that other lending institutions can't. And so so there's advantages to each one. We like the credit union. I like the credit union world because to me it's really more about that local community feel. We like investing in the communities that we're in. We do a lot of financial literacy courses and financial education classes. We do a lot of donations here in Colorado as well to different things through philanthropy efforts. And so I really like that piece of it, which is why I've chosen the credit union world as a lender.
I love that.
Yeah,
because I remember my loan was sold off to somebody else, and then it went to somebody else.
Yeah.
And so to have a local person and a local business taking care of it is kind of nice.
Yeah, and you'll always know who you need to call. It doesn't mean we don't sell some of our products, but we will retain those servicing. So even if we do sell it to Fannie Mae, you'll always know, hey, here I have some questions. Can you help me with this?
That's great.
Yeah.
Everybody needs somebody like that.
Yeah.
That's awesome.
Yeah.
What's the biggest question that people come to you with? Is there one thing that you hear all the time that you can share?
Yeah. What's your lowest rate?
And it's all about the numbers.
It's all about the numbers,
Yeah.
which is really, it's vital, especially in today's market where affordability is a big deal. And so, but the challenge with that is if I were to tell you what the lowest rate is, it may not be right for you, right? So it's important. I like to say, well, let's talk about what your situation is. Have you purchased or owned a home before? Is this going to be your forever home? How long are you going to be in the home? There are different products that we can offer that can help you if you're a first-time home buyer, or if it's strictly monthly payment driven. Maybe we take a look at doing an ARM product, which is, we love, in the mortgage world, we love the acronyms.
Oh, yeah.
It's CLTV and DTI, and sometimes it's just a bunch
don't
of
know
BS.
what ARM means.
Yeah. So ARM stands for Adjustable Rate Mortgage. They really got a negative rap back in the early 2000s. And that's kind of what I was referring to earlier when a lot of legislation came out of that. At that time, primarily people were doing what were termed option ARMs. So they have one of three different payment. They had their option of which payment they were able to make,
Wow.
either interest-only payments or the overall payment, and really got a lot of people in trouble because what are you going to do? You're going to pick the lowest payment.
Right.
And at that time, sometimes it got people upside down in their house.
Well, sure, if you're only paying interest, you're
Right.
not putting anything towards the actual
Correct.
mortgage.
Yep.
Oh,
And put them
gosh.
in a negative amortization situation. But again, some of the legislation that came out of the Great Recession back in the early to mid 2000s kind of did away with those, a lot of those. And so now, because of our rate environment where it is, today's rate, depending on when people are watching this, right? It's really kind of falls in line with where it has over the past 50 years. Started tracking rates back in 1971.
Okay.
And so over the past, what are we at, 52, 53 years now?
Yeah.
The average rate over that entire time is 7.4. And so we're actually below that right now. But really, the challenge is what most people remember.
Right.
is
What
the
I'm
past-
in,
Right.
2.4.
That
Right.
2%
Yeah.
is so fresh in their memory.
Right.
They're
Yeah.
like, that's crazy, 7%.
Exactly. Yeah. So people are like, this is so high, but if you look in the grand scheme of things,
Right.
it's really not.
Right.
Yes, it's high compared to where we've been over the past 5, even 10 years. But it certainly is a challenge. So, but because of that, ARMs can be a good option right now. Or, we think about down in Colorado Springs, there's 4 military bases
Right.
there. People are coming in and moving out of there every 4 years. If you're not going to be in the home for, say, 20, 30 years, ARMs might be a good
Great
option
idea,
for you.
yeah.
So.
Sure. And they're not making people upside down anymore.
Correct. Yeah. So, and how an ARM works is it is amortized over 30 years. So you're looking at a 30-year payment. And there's different things like a 5-year ARM, a 7-year ARM, a 10-year ARM. What that looks like is your rate and payment are fixed for the first 5-year or 7 years or 10 years, whatever that is. So that will not change.
Okay.
The rate and payment won't change for that time frame. But where a lot of people tend to shy away is at the end of that initial fixed period, it could adjust up or down. So I have seen it come to work as an advantage even because
Right.
with the volatility of the rates.
You're not stuck for 30 years.
Correct. Yep, that's exactly right. And even if, let's say whether it's a 7-year ARM or a 30-year fixed rate, if rates come down in 5 years, you can still get out of that. It's not like you have to stay in that for 7 years. It's just that the rate and payment are fixed for 7 years.
Right.
So either way, we want to help you get to where you want to be, and sometimes ARMS is a good vehicle for that.
So I know you're not a genie, but if you look to the future, do you have any idea where we're headed? Are we kind of going back down? Are we going to stay a little?
I'll tell you,
As if,
let me tell you. So
He's in charge.
Here we are,
experts,
May 2024.
I know, right? Yeah, May 2024. So I'll tell you exactly what rates are going to do. They're going to go up, they're going to go down, or they're going to stay the same.
Are you sure?
I know, that's the right genie. That's my Aladdin's
So
lamp for you
good.
guys. But the interesting thing is, experts have predicted 27 of the past 2 recessions. So when you look at it, in my mind, nobody expected them to ever get as low as they did. The lowest they got was in January of 2021, down to 2.65%, which is crazy to think about. Right?
For me.
Yes, yeah, for you. But I don't know that we'll ever see that again. At the start of this year, in 2024, experts predicted that we would see 3 to 4 rate drops. Here we are in second quarter. We haven't had one, and now they're saying that is probably, if it happens, that it won't happen until September. So if you ever hear somebody that says, I know exactly what rates are going to do, turn and go the other way. Because they're so volatile. And so that's why it's important for us as lenders to say, let's look at your overall goals, right? Is this your first home? Is it a rental property? Is this something where you want to build, your forever home? Or maybe you're in a stage of life where your kids have moved out, you're downsizing, and you want to get the luxury amenities. Those types of things. So important to figure out kind of where you're at in what stage of life, and choose what's best for you.
Okay.
Does that help? Does that answer?
Yeah, that's good. Yeah. I don't even remember what the question
was. You didn't really answer the question.
Talk about the rate.
That's right. What am I going to do? Bam!
Live TV.
It's fine.
Yeah.
It's totally fine.
That's fine.
That's how we roll.
Right. That's how we roll.
All right, what else? Gosh, different options. You've sort of talked about a little bit about that. Is there anything you want to elaborate on?
Yeah, I think again, there's a lot of different programs. Kind of coming back to one of the questions that you mentioned earlier, Stephanie, about what are some of the kind of maybe misconceptions that people have.
Yeah.
A lot of people think that to get into a home for the first time, they have to bring 20% down.
Yes. I believe that a lot of people believe that.
Right, and that's not true. So you can get in, there are programs out there that you don't have to put anything down payment other than like $1,000.
Wow.
Really?
There's a couple programs for us. We have a portfolio program that is within our organization that is 100% financing. Now, we as lenders do want to see your buy-in, right? So we're not just going to lend you everything. You need to come with some skin in the game. So whether that's $1,000 through programs like CHAFA, Colorado Housing Finance Authority, or us, our 100%, we need like 1% of the overall loan amount. And so there are some programs, but even on conventional side, we can look at a 3% down program, or through FHA, 3.5% down. Now, where the 20% comes in, that most people think, I need to save up all that money. If you don't have 20% down, there are organizations that are called PMI, Private Mortgage Insurance. Some of our partners, MGIC, Arch, Radian, Essent, that will basically, it's insurance that they are putting their trust in you to pay the mortgage to us, and then if not, there's some ramifications. But yeah, you don't have to have the 20% down. There's ways to get into home. There's different options that we can look at to help people get into it. And again, it comes back to it is challenging, right? Even if you're only putting 3% down with the price of homes.
Right. I think about my kids.
Yeah.
Well, I was just thinking about my.
Gosh, they had 20% would be so much money. But 3% is still a lot because, like you said, prices are high.
And the
right
CHAFA
now.
idea, I think, is great for first-time buyers because that's part of what's going on with my people.
Yeah.
Is that they can't seem to come up with that money.
Yeah.
So to know that they can still get into a house is pretty exciting for them.
Yeah, and there's other programs too. There's a program called Home Ready, which is kind of geared towards lower income, and we take a look at the median income for the overall county where you're at, and so there are a lot of programs as well. So that's kind of on the first-time homebuyer side.
Right.
On the other side, there's different jumbo programs, and a jumbo loan is. Sometimes people are more familiar with the term jumbo. Really, it's anything that's above non-conforming loan limits. Right now, it's $766,550. So $766,000.
To be specific,
right?
Random number.
If you want to take a look at it, but that changes every year, and so again, and even within that, there are different counties where that number is a little higher. They're called high balance counties. And
what would be one of those in Colorado?
If you think about like Aspen or some of the Summit counties areas,
Luxurious places.
Yeah.
Okay.
Yeah.
Wow.
So So there's a lot of options, and it's important to kind of walk through those, as opposed to someone saying, yeah, just tell me what's your lowest rate.
Right. That's not the right question.
Right. And there's so many things that go into what that rate is. We've kind of alluded to a little bit, but what's your overall credit score? How much are you putting down? If you own a home, how much equity do you have in the home? What are you using the funds for? So there's a lot of different factors that go into it.
And it's not really asking the right question. Like, there's not a better question, right? It's all about how your lender follows up with that question. Right?
No, that's right.
You have to know all the questions to ask.
Yeah, correct. And what are there's sometimes people will look at we're getting into a first time home, and we're gonna basically they kind of don't tell us that they're going to use it as a rental property. Well, there's different guidelines when it comes to rental properties, so you really have to be cautious on that.
So that matters.
Yeah, absolutely matters. Yeah, yep,
Gotcha.
Yeah. So a lot of info. I don't know if it's
so many
things.
things.
Right. Well, because a lot of our viewers are wondering those same questions, so you could always go reach out to Galen or another mortgage broker to get the answers that you need for your circumstances.
Yeah, and I've been doing this a long time, over 18 years, kind of in different aspects of it. And I like to. I know that I'm not always going to be the be all end all, right? We don't have programs to help everybody.
Right.
But
so
I
good when we can all realize that. Like, I'm not the person for everybody. It's okay.
Yeah.
Yes.
But that's, because I've been doing it a long time, I have other relationships. And so if it's something where I can't help you, I want you to be successful, even if it's not with me. And so, sometimes it's a matter of people just aren't ready too, right? They want to get into a home, but maybe they've had some credit challenges in the past, and we can refer them to some people to help do that as well, or help
collaboration.
That's
right. Competition.
That's right.
It's kind of our theme.
It's kind of our thing.
Yeah.
So I love that.
Yeah, it's good.
That's
great. What other questions?
I'm kind of thinking about, like, a lot of our listeners probably are on the selling side. What do sellers need to know about, I don't know, maybe what their potential buyers issues that might come up, or is that?
Yeah, I think, when we go kind of through the process, I think it's really important for sellers to have the conversation. And this is where a lot of the stuff that's going on right now with the NAR settlement and the value of real estate agents, what the value that they bring, it cannot be overstated, because
Agreed.
all the stuff that they do for both buyers and sellers is just people don't get it, right?
For sure.
Well, good ones.
True.
There's not good ones.
True. No, that's a valid
good
point.
agents do a lot.
But for them, it's. I bring that back to say it's really important for them to be realistic, right? Okay. If you've seen the memes where the tax assessor thinks your home is worth this, and the buyer thinks your home is worth this, and all that, I think it's again, the value of an agent can bring, here's the market that we're looking at, and based on that, this is what I think we should price it at. And so the other thing I think that sometimes comes into play is, no, I've taken immaculate care of this property, but then when a buyer goes to do an inspection, the water heater's 20 years old, or there's potential, a little crack in maybe down by the wall. Well, is that a foundation issue, or is that settling? And so I think be open if issues come back on an inspection, to work with the buyer on what that looks like. Do they fix it? Do they offer a concession? Do they lower the price? Those kinds of things. But again, I work typically more on the buyer's side, as we look to help them buy and get into a new home. But hopefully that answers maybe a couple highlights on what sellers can do. I think really where you guys can definitely add value is working with those sellers to make it look like the home that buyers want to be in.
That's it.
Yeah.
Exactly. That's the whole thing.
Yeah.
And if we can increase that perceived value, then hopefully they can walk away with a little bit more, and then they're better off when they're buying that next home, and starting to talk to their lender. Hey, I might be able to sell for this much, or whatever. Maybe that will help them.
I'm curious. What do you guys hear when it comes sellers, what's the big misconception that sellers have about their
I think they
staging?
think staging is really expensive and a really kind of a pain in the butt to deal with, living in a staged home, which
Right.
of course is not easy, but
Yeah.
it doesn't always have to be that way.
Yeah.
So,
Yeah, I agree. I don't know. I think the biggest obstacle for people, for me, what I hear is I don't know where to start. I don't know what to do, so I'm just not going to do anything.
Yeah.
My realtor tells me I need to start packing. Okay, I'll do that. But no, you need to do more
Right.
than that. Like
Yeah.
you
Right.
can't have a red bathroom or
like my next door neighbor.
paint
Okay.
colors.
Mental
matter.
note, I need to go buy some
Paint
paint.
your bathroom. No, I mean all of that matters, and
Yeah, preparing.
people's perception happens from the curb, like before they
That's
even
for
walk
sure.
in.
Yeah.
And so if we can present it to them and increase that perceived value, and
Right.
they walk in, like you just said,
Yeah.
they can see themselves living there, they can feel at home in that space.
Yeah.
They're going to fall in love and they're going to want it, and they're going to be maybe willing to pay a little bit more for it.
Yeah, no, that makes sense. I'm curious if people ever get like offended, like, what do you mean my furniture
course.
isn't good enough?
Yeah.
Of course, every day I get that.
But we're trained to talk to them.
Yes,
We are.
yeah,
In the
in a-
gentle art of persuasion.
That's right.
We're trained in that.
Yeah, perfect. I
Yeah.
love it. Love it.
Yeah, it's all in the words we
Yeah.
use.
Make that the truth on so many levels.
Right, for
Yeah,
sure.
yeah.
Yeah. Well, this was good. Is there
Good.
anything that you can think of that we haven't asked you, that we haven't touched on?
Yeah, I don't
Last
think so.
thoughts?
I mean, we'll happy to put like my contact info down in the comments.
Most
if
definitely. You
guys-
can go ahead and shout yourself out here if you want to.
Yeah, no, we'll put them in the comments.
Okay.
So they can reach out. So yeah,
Easier
we'll,
to copy and paste.
Yeah. Rather than they're not going to write it down. So,
That's right,
yeah.
you're right.
But
Okay.
good. I
Sure.
appreciate you guys having me. I
Very
think so.
good.
Absolutely.
Hopefully, I've been able to help you guys and some of your listeners and
Super
and,
insightful. I mean, so many people
Well,
don't know
right.
what to do, where to start.
Yeah.
So start with your lender.
Yes.
Give Galen a call if you don't have one and you need some help in that direction
Yeah.
too. So
Yeah. We'll talk
right.
about kind of what your goals are and what you're looking at, and see if we can help you get there.
perfect. Thank
Yeah.
you for joining us.
Yeah,
This
no,
was
it's my
great.
pleasure. Thank you
coming.
so
Good
much.
conversation.
Yeah.
We appreciate you.
Yeah, appreciate
All
it.
right. Thanks for
too.
tuning in, everybody.
Bye.
Have a great day.
Thanks.
Thank you for listening to Stager Savvy, insider secrets to stage your home and sell it for more. We hope you've enjoyed our discussion on home staging and gained valuable insights that you can apply to your own real estate journey.
If you have any questions or ideas for future episodes, or would like to learn more about our services, please feel free to visit our website, stagersavvy.com, or reach out to us directly at stagersavvy@gmail.com. We're always happy to help.
And don't forget to subscribe to our podcast to stay up to date on the latest episodes. And if you enjoyed this episode, please leave us a review. Your feedback is incredibly valuable to us, and it helps us improve our content and reach more people.
Thanks for tuning in. We'll see you next time.